What do we know about this potential deal?
That's right. Well, in fact, I can tell you that the deal has, in fact, been confirmed. So today, this morning, we just had a release through, and Keurig Dr Pepper have made an offer for JDE Peet. The offer values the coffee company, which bills itself as the world's largest pure-play coffee company, at 15.7 billion euros. That is around $18 billion. And this is a really transformational deal for Keurig Dr Pepper. In the release, they say once this acquisition has gone through, there are plans to separate the company into two publicly listed companies traded in the US. So you'd have, on the one side, a global coffee company focused just on coffee, with that addition of JDE Peet's kind of global coffee portfolio. And then on the other hand, you'll have a soft drinks company, so just focused on non-alcoholic beverages, including, obviously, Keurig Dr Pepper's very popular Dr Pepper brand. So you're going to have this huge transformation in the company following the closure of this deal, which is expected to close in the first half of 2026.
Well, Charlotte, can you just explain to our global audience the logic of restructuring the company to do that? Why pursue that now?
It's a good question. And so for context, in 2018, you had a merger between Keurig, the coffee company, coffee side of the business, and Dr Pepper, which is obviously focused on that soft drinks unit. And since then, the soft drink side of the business has really been outperforming. Consumer demand remains really strong. But the coffee side of Keurig Dr Pepper has struggled. It's faced increased competition. Coffee companies around the world, and this includes JDE Peet, have really been grappling with record coffee bean inflation. So the price of coffee has really been kind of going through the roof. That's obviously squeezed margins at coffee companies around the world. And finally, more recently, you have the impact of tariffs, which are obviously kind of increasing the price of importing coffee into the US. So the coffee side of the business has really been kind of struggling to compete. There's lots of competition in that market in the US. And so the rationale behind this deal is basically to add JDE Peet's huge geographical footprint. I mean, they own brands like Law, they own the Peet's coffee brand, they own Jacobs, Stout Egbert. So to add that to the coffee side of the business, make that into the world's kind of global coffee player. Meanwhile, you have the soft drinks part of the business, and that can really be, you know, unleashed to soar without the kind of coffee unit addition. So the rationale is really to kind of capitalize on the strength in the soft drinks growth, whilst making this kind of coffee whale, if you like, of a company.
Coffee whale of a company. One of the stats that jumped out for me, 132 billion cups annually is what they claim to serve JDE Peet. So you're talking through the restructuring there, Charlotte. What does it mean then for JDE Peet?
Definitely. I mean, this is a really interesting company. I mean, it's Amsterdam listed, but it bills itself, as I said, world's biggest pure-play coffee company. And in November, they had a new CEO announced, Rafael Oliveira, and the shares have really been on quite a tear since he joined. He pledged to streamline the operations. He divested some of the less strongly performing parts of the business and the tea side of things, and he's pledged to kind of focus on the key brands, so Jacobs and also the Peet's coffee chain. So really kind of focus on optimizing the strength in their markets. And before that, actually, the company was struggling. You know, IPO'd in 2020 to great fanfare, raised, you know, a huge amount, 2.5 billion, I think it was, on its listing day. Really enormous listing. But since then, it's struggled to maintain momentum. So hopefully, I think the rationale is to kind of boost JDE Peet's by, you know, combining it with Keurig, and hopefully this will create this kind of global coffee company.